Well, a new year brings with it new economic forecasts, but also we get the inevitable question from my wonderful colleagues, well, how did you get on last year? And so rather than mumble something awkwardly about when facts change, I changed my mind, I thought I'd tackle it head on in this video. Well, there wasn't really a great deal of visibility in January of last year. We did know that the vaccination program was getting underway. We also knew that there was more stimulus in the offing, and we'd hoped that the pandemic would gradually subside. And that led us to conclude that we'd probably get a decent economic outlook, probably growth around just above 5%. We also thought inflation would pick up to a little bit more than 2% for the full year. And while interest rates weren't necessarily going to be rising anytime soon, we'd predicted early 2023, we still thought that the 10-year Treasury yield could rise, and we predicted that would end the year at 1.5% versus the 0.9% that it started 21 at. It turns out we're actually pretty close on growth. The economy likely expanded about 5.5% in the end, while we're actually spot on the US 10-year yield. It did come in at 1.5% for the end of the year. The inflation call was less successful though. I think, to be honest though, the supply chain strains, the labour market shortages, and the ability that companies had to pass higher costs onto their customers really did surprise pretty much everyone. That said, we were still well shy of predicting inflation at 7%, a 40-year high in December of 2021. So what's in store for 2022? So we're actually pretty upbeat again. We think growth of nearly 4% or so. I'm cautiously optimistic that inflation will fall, but I think for the second year running, we are probably looking at an average of 4% for this year. And there's certainly going to be a minimum of 3 interest rate rises this year, more probably 4. And I think this, coupled with the Fed starting to run down its bloated balance sheet, can allow Treasury yields to continue moving higher, and we would think that the 10-year can finally break above 2%. Now, all in all, this should be a pretty positive environment for the US dollar, and we think that the euro-dollar rate can probably move below 110 during the summer.